Welcome back to Squawk Box. Rick Santelli here live on the CME HQ. And we have breaking news. Yes, trade balance for September coming in at $73.3 billion. Of course, that's a deficit, and it follows a slightly revised minus 65.7, and 73.3 is the smallest trade deficit, well, since last month. It hasn't popped up much, but here's what you want to pay attention to. It was minus 106,000 in March. That was a record. Non-farm productivity, 0.3%. That's definitely a disappointment. And when it comes to productivity, we've definitely been on the short side with respect to the special sauces, Greenspan used to call it, and the associated unit labor costs, 3.5%. Productivity's down a bit, and this is unusual because unit labor costs are down a bit as well. Now, remember, this is a third quarter preliminary. There's going to be many changes going on with respect to this, and do keep in mind that the recent high watermark has been 12.7 in terms of unit labor costs, so we've seen some significant moderations. 217,000 on initial claims. That's less than expected. And if we look at continuing claims, 1,485,000. That is more than expected, and that actually is the highest level going back to March 25th of 2022, so that's a bit bigger than expected. 217,000, well, that's easy. We've been on the low side. 217 is only 1,000 less than the 218,000 from last week. We want to continue to monitor all that is yield curve. The yield curve spread, the real one, 3 months to 10s, actually has shifted positive after 4 consecutive closes inverted. We saw the Bank of England raising 0.75 of a point, the biggest hike since the 80s, about 33 years. Remember, in the 80s, their high watermark was 15% in 1989. And finally, maybe the most important thing, yesterday, well, the Fed didn't pivot. It didn't pause, and it kept punishing to some extent as we see the markets here. Press conference was a real downer, according to many traders, but they did have about 20 minutes of happiness prior to when it started. Andrew, back to you.
Okay. Rick, thank you for that. Appreciate it. Want to get over to Steve Leisman, who joins us now with more. Steve.
Yeah, a couple things, Andrew, that are interesting here. First of all, when you wonder what Powell's concern is with wages, what he wants to see is he wants to see productivity, wages going up along with productivity. His problem with wages is not that Americans are earning more money. It's that they're going up more than productivity is going up. This was a turnaround for what it's worth, though, as Rick did suggest, it is less of a turnaround than had been anticipated. And, of course, you have that issue of jobless claims remaining relatively low, suggesting that the job market remains pretty healthy. One thing I never did see, and I was looking week after week at this, not much of an increase at all in jobless claims in Florida. I don't know if that's yet to come or if we've been through that already. There was a small bounce, a tick up there, but because of the hurricane down there, never really seemed to see a big increase in jobless claims down there. So they remain relatively low. We set up now for the jobs report tomorrow, expected to be north of 200,000. And Powell has said repeatedly he's just not seeing the slack in the labor market that he believes needs to develop in order to help fight and bring down inflation. Andrew?